What's up everybody, and welcome back to another video. And this video is certainly a special event. It's not only our weekend video where we take a look at the markets for the week ahead, but we're also in what I like to call super earnings week. That's right, the biggest FANG tech stocks, the biggest stocks in the stock market are about to report, and this can tell us a ton about sentiment moving forward. It can begin rallies and end them just as fast. So in today's video, we'll be using our top-down approach on the S&P 500, Apple, Nasdaq, Tesla, and more to try to find out what's going to be going on for the week ahead. Stay tuned, guys. This will be a good one. All right, guys, and welcome to the video. So before we get started by talking about the week ahead, let's have a quick look at the week past in terms of what's actually happened on the stock market and whether we can get an idea of what Wall Street was rotating into. Sector rotation is one of the most important things that you can look at in markets. And this is one of the ways that we can get a bit of an idea of what's going on. So for the week, Google, Amazon certainly standouts in terms of weakness. Obviously, PayPal also down with their thoughts about purchasing Pinterest. And we had Intel coming out with a lackluster result, etc., missing on some of the guidance. But the standout of the show was obviously Tesla. Many people of this channel have been following now for a couple of months here would know that we've only seen really bullish price action for a long period of time. And it's gone from bull to bull to bull. Not only did they hit expectations, they beat them. And we did see that sell-off before the release. And then, of course, straight after the release, people were purchasing it back up on the next day after that little dip occurred. We'll look at Tesla in this video, and we've got a lot to talk about. So overall, fairly green, great week if you're in the longs. However, we did see some weakness come to show near the end. And we want to talk about this because we are in super earnings week this week. So we had the Dow Jones on Friday session doing 0.21% up. The S&P 500 was marginally down, up, down, and all around. You'll see there was that spike in the middle of the day to the decline side. And the story was really about punishing the Nasdaq stocks, down 0.87 on the day. When we move over, you'll see XLC was one of the big sectors that was getting beaten, XLK. And overall, the financials, the consumer staples, the energy, that was all up on the session. So what's happening in the market, we'll take a look just in a minute, but I also want to discuss how it's interesting that things change so quickly in terms of how Wall Street perceives things. All of a sudden, we now have JP Morgan turning positive on crypto. I wonder why. Now they see a bullish outlook for Bitcoin into the year end. And you know what this is? Let's just take a look at the charts. So obviously there was that big sell-off in the middle of the year. Then we had a pickup, then we had a pullback. And all of a sudden we have, of course, this exchange traded fund for Bitcoin, and the market hit those kind of all-time highs. But notice, where do you think probably JP and some of the other guys were picking up some of these coins before making these announcements? Of course, they were doing it here. And of course, this is what we are expecting to see. We'll expect to see over the coming years more and more and more money coming into these coin markets. And while they'll still be volatile, this is the next, I guess you would say, expansion of the coin market into the bigger money. So now we'll start to see alternative assets coming into it. We'll have people allotting certain portions of their portfolios. And the more regulation that's around, I guess, like the brokers going in, I see that as a positive sign. So we do cover crypto here on the channel as well. That's one of the things that I think a lot of people get wrong. They see regulation on the broker side as bad. I see it as an opportunity to get big, huge funds to take some of their alternative assets and invest into the coin market. And that could mean really big things. So we were discussing earnings, and earnings is huge this week. I mean, you can look at this chart. We've got Apple, we've got Amazon, we've obviously got Alphabet, Microsoft. I mean, what else do you want? You've really got some of the largest companies coming out. Facebook after the close will lead us on Monday. And this is going to really show us what is in store for the market over the next coming weeks. If they disappoint or they're lackluster, we know the FANG can smash around the tech sector, and that can also cause the market to come down. And we have been talking about the fact that the market's been on a bit of a heater. So this is some provided information from one of the members of the community, Discord community. You can jump in on the links in the description down below. We have both a public and a private one, and this is provided by Ian. So look, he's done some studies here on gaps on the S&P 500 from 1927 all the way up until October 18th. And what you'll notice is that if a gap is going to fill, it usually fills kind of over that first 7 to 9 days. After that, it becomes statistically less likely to fill. and then we get the fills later on, but really they can be a very long way. So while 91% of all up gaps do fill in the end, really the big ones, 75% of them fill over the first kind of period. And generally it happens very quickly, which can help traders and investors get a bit of an idea. We had 3 large gaps now on the uptick of the SPY, and we'll look at that soon. But this is just something that I think always helps people. And if you take a screenshot of it, it might be helpful in your analysis in the future. Let's now look at the volatility index, or the VIX. So we've had lots of strength coming into this earnings seasons, lots of hype, and lots of anticipation. Many stocks starting to do that, buying the rumor and then potentially selling the fact. We've had that on a few stocks now. The volatility index, or VIX, closed on the 15.5. And this is very important because we've got a support line through this, and you'll notice it's exactly where we expect potential volatility to come in. Notice also kind of like a long leg doji here in terms of an indecision candle closing the week. Why do we watch this zone? Because whenever it's come down to this zone, we've usually seen that small spike of volatility. And this is fairly normal after a pandemic, after a big crash, after whatever kind of volatility we've seen that really caused the markets to get bashed up. It doesn't just return back to its normal 10 to 12 area. It tends to come down to a base, bounce off that base for a while, and then after all that volatility's come out, it goes back down to the more standardized things that you see in normal bull markets. Let's move over to the US 10-year, another elephant in the room here. US 10-year has continued to rise, yet not really putting that much pressure on the US 100. So the Nasdaq not really getting pressured that much, neither is the S&P 500. It did have a fairly decent close here at the end of the week, just closing right on the previous high of the week before. If this thing gets back up, let's say 1.75, you'll see a lot of people talking about it all of a sudden. It's probably going to be pressuring the Nasdaq down. And if, of course, it bashes through that 1.76 area, 1.75, we expect it to go to 1.95. And at that point, you'll see a lot of people debating it, a lot of people saying, oh, this is the beginning of incredible inflation and inflation out of control. I think there'll probably be a lot of resistance here, but I have full expectations that this 1.95 will be reached at some point, let's say over the next 3 to 6 months. I mean, it just seems very likely now that it's going to happen. And I think you can watch that as a trader and investor in the markets and potentially take advantage of it depending on how you feel about the US 10-year. Before getting into the indices, let's talk about Tesla. So Tesla's close is phenomenal. This is exactly what you want as a Tesla trader. Not only has it smashed through the previous highs, let's put it on a weekly to put this in perspective, it's closed well above them. So there's no doubt that this thing's feeling bullish right now. There's no doubt that it's going into a traditional seasonal of strength here, that November, December. If you pull the stats here either in our private Discord community or have a look at seasonality, it can be quite strong over this period. And I wouldn't mind it now this week to actually pull back to this 880 area and see whether we can retest that zone and find buying support. A lot of people will already be picking it up to the long, anticipating that key 1000 to be hit now. And I don't blame them. I mean, this is a very bullish breakout. And in the past, if we've looked at breakouts of Tesla, e.g. here's a Tesla breakout. Look at the strength that ensues. We talked about that one on the stream. Look at the Tesla breakout. Look at the strength that ensues. Look at the Tesla breakout. Look at the strength that's come in. It's traditionally been one that almost sometimes doesn't even pull back. It just goes so crazy. I think it probably will nowadays due to the nature of how big it is. But this is now worth $900 billion. So we're getting close on that 1 trillion cap. And you would think that it kind of wants to do it after all of this hype and anticipation. So we'll go back into the daily. We have, of course, that 880 previous little bit of resistance before the earnings, sold off, bought up after the earnings were good. You really didn't get punished for selling it into the earnings because it actually did go down. And then you could have picked back up after you read the fundamentals and liked it or didn't like it, depending on what you're thinking. And then 880 now could be that pullback zone, and hopefully there's buying support here. We're starting to get far away from the 20. This is not unusual for Tesla to do it, but do remember that's been where we've seen that buying pressure 1, 2 times so far, and most likely a third should we get it. Big trend line as well on this fantastic stock. When we take a look at the open interest from the options perspective, this gives us a bit of an idea of put walls and call walls. I'd say it's a wash. I don't know who the hell this is down here saying, yeah, I think Tesla's going super bearish, but you'll notice this is one of the weakest weeks in terms of, it's just not very strong in terms of options. There's just some person going really bearish in terms of puts and a smattering of calls all over the place. And I think this is fine. This allows Tesla really to be open to kind of keep moving up here. And yeah, it's exactly what we've been really talking about over the last couple of weeks. Let's move over to Apple now. So Apple stopped at our call wall. We kind of called 150 being the top last week. I think it was pretty obvious from a technical perspective, and also it made sense to our options call wall. And this is what I've always been saying. Number one on your kind of analysis when you're trading should be the technical analysis. Number two, bring in actionable data, bring in concepts that you believe in that can help you understand whether that resistance or that support's going to be a key level for you to look at. Now we have Apple earnings only 5 days away. And the problem with this is going to be we generally see Apple actually bull into these events. So I would love it to come back down to these two moving averages, about this 146, hit the 20 and the 50 exponential moving average. This would be fantastic, and then bounce off and then hopefully continue to rise. But we do know that Apple likes to be quite bullish. It's like buy the rumor, sell the fact has happened many, many times in Apple. If you look at earnings, usually it comes in, it's kind of bought up before, lackluster, goes down after the earnings. Bought up before, lackluster earnings, sideways. This is something that is a phenomenon and has happened a lot. We're at an interesting point. Have we bought up before earnings? Sure. But yeah, I mean, 150 will be a key breakout for a lot of people this week into earnings. I'm not sure what's going to happen with, of course, all of these delays and, of course, silicon issues. And we've got a lot of problems that they've already talked about in the markets. But yeah, 150 will be a watch. Let's now have a look at the options. So this is the options taken from last week. See that 150? See how it was what we call a call wall, or effectively an area of interest with our technical analysis. We don't expect Wall Street to want to pay this option strike off. If they did and it went above, then it can actually get out of hand and go very, very crazy. But this was a key resistance and a huge amount of options sitting there. For the week ahead, it gets a little bit different. It seems like the option strikes are actually a little bit higher. So rather than being more around the 150 kind of area like here, they seem to have gone up a little bit. You can go check it over at Yahoo Options. Overall, it's always a bullish stock. That's kind of where we're starting to see the call wall open. Continue to watch this though strongly throughout the week. And I think if it breaks past 150 and gets a resistance closeout, there could be a couple of days of ramping there. So certainly one to watch, and a lot of these FANG stocks are going to be very interesting depending on the earnings. Let's move over now to the S&P 500. Let's talk about the really big key level here of indecision. So we had the previous support of that beautiful ascending channel. We can see it here, very strong, was fantastic. We broke out below that. We've retested it once before and found resistance and sold off. We've now retested it again. You'll notice on the SPY, what does that look like? Let me zoom that into everybody here. Anyone that's been watching the live streams or been following the channel for a while, you would know this is a long leg doji. And by the way, if you're new here, definitely consider subscribing. We cover a whole bunch on the markets, and I'm sure you'll get a lot of value out of it. We've got the high, we've got the low, we've got the indecision. We close below this. What happens, guys? We get decision made, and generally that will cause further weakness markets into our key level here at around that 450, 444, 442 zone, this little green box. This would be the perfect area if you are bullish from a technical perspective to see the previous resistances become support, the 20 moving average to become support, the 50, etc. And that would be fantastic. So if it is going to occur, that's the pullback. I don't expect it further than that unless something happens on the earnings. And we've got that indecision at the peak, as many people would say. Same thing for the SPX. Of course, the SPY is just the ETF version. The long leg doji, here's the resistance that becomes support. Here's the 20 moving average, and the deeper pullback could be 4,400. So 4,400, 4,460 key levels of support to watch this week. And if we close above the long leg doji, guess what, guys? Looks like we're continuing on up into the back end of October, into November, etc. We've also got a few other things that we can look at, such as the options. I think this is a difficult week to see clear call walls and put walls. I think the put wall might be more obvious here, but this is quite low. So it's not going to help us so much. We will continue to watch it. And the call walls, there's two nice strikes here, but we haven't got clear definition of which one is going to be the more traded strike. So probably after Monday's close, we'll revisit this and take a look at it. Max Payne Theory, a lot of people like this kind of chart. I find it useful when you're in a sideways market. it's showing us that 446 would be the perfect maturity for Wall Street to options expire most of the puts and most of the calls at the maximum amount of money. So we call it the lobster lunch or the lobster dinner for Wall Street if that happens. It doesn't always happen, guys. It is used during very specific technical analysis techniques, but some people love to follow it. So I'm going to include it in the weekend videos, and that's sitting at 446 for anyone that's interested. Move over to the Nasdaq. This was the weaker of the markets due to probably the 10-year and just a mixture of really huge kind of injection of money that came through into the markets for this last week. And also I think Snap is kind of weighing on the tech stocks a little bit. You know, a lot of them make money from advertising. It's not exactly the best earnings result they had, and that's hurt the Facebooks, the Googles, etc. Pull back to the 20 again would be fantastic, around that 367 area, and then a resumption of the trend. We'll have to see whether we get it. Very similar to the others. If you have a look on the weekly, you know, everything's pointing towards the bullishness at this stage. We're still in that giant ascending channel here on the QQQ. We've broken past the resistances. We've got that top end resistance line we can use in the future to find key resistance that might sell off from. And I kind of like that, you know, being able to use the TA in the future and forward project is going to be very fantastic for us. But overall, the weakness could ensue due to the fact that we've had that really bad kind of snap earnings to a degree. That's going to push the market down. And if it does, we get back into this level. Of course, it's big earnings. We've got all these big tech stocks coming out. That's what's really going to drive the market more than anything else at this stage. So watch this level, watch the resistance, and of course, watch the top of the peak should we go into a monster week. Bitcoin started to, I guess you would say, consolidate, which is probably going to point towards money moving into the alts at this stage. We hit that 66,000 at the launch of the Bitcoin exchange traded fund. Everyone was getting hyped about it. And of course, what have we seen at the start of this video? Suddenly all the big bankers are talking about how these are the best investments and we love crypto and everything. What generally happens when they're talking about it? It's kind of over for a little bit. It's having a bit of a breather before its next move. And I tend to agree. I think there is a lot of strength cases into the end of the year, but then we've got to go and put back in perspective, well, how far are we away from certain moving averages that the market likes to come back to? So we're pretty far away from the 20 weekly. We actually are closing, it looks like, the weekly candle here in terms of Bitcoin. If it closed like this, what's this? A pin bar or a shooting star? A bit of a rejection style candle from the highs up here. And we go back to the daily 20 and we haven't quite hit that in a while either. So maybe some consolidation for Bitcoin for a little bit. That would be quite healthy around this area, with a follow-on effect coming into that Thanksgiving kind of event in America. What we've seen traditionally be a bit of an early ramp into that area. That would be fantastic. We'll continue to watch Bitcoin throughout the week as we get more clarity in it. At this stage, it looks like 60,000 is kind of like a buying zone just due to the psychology, and we have that high sitting at about 67. Bitcoin shorts not increasing at this stage, showing that the big whales aren't exactly, you know, shorting Bitcoin. There's no real true manipulation from that aspect on there. It was just huge amounts of hype. Now there's a little bit of profit taking. In the week in earnings, what's going on? Not that much. I mean, it's really more about the stocks themselves. We've got the advanced GDP, 8:30 a.m. Thursday. Doesn't tend to move the market that much, that event. When then we keep going down, we've got core PCE price index on the Friday. And I think one of the biggest things, we've got the Treasury currency report, and of course, daylight savings changes for certain places. So if you're in Europe, you're in London, any of those places, please remember, all of a sudden it's all shifting. So we need to be aware of this because daylight savings changes. Sometimes people forget which date, what hour it's opening and everything, and that can cause you to miss out on an opportunity. So do remember that, guys. I thought I'd shout it out. Other than that, I think it's a pretty exciting time to be in the markets. We did see a big shift from, of course, negative to positive. We've got the Evergrande situation, of course, continuing to be a bit of a story across how systemic is it everywhere in China. That will be probably the biggest thing to watch just in terms of really big problems out there. And I'm excited for earnings. So join us for the close markets because we'll be covering closes live into the close, into the earnings. We'll be following the biggest stocks into those zones. And I'm super pumped. So join us, subscribe if you enjoy the channel, and give us a big smash thumbs up as well. And also, which stock are you looking at picking up this week? Let us know in the comments down below. I'm super interested to see what the community is loving right now. Bye for now, guys.